So we're looking at SPCE, Space Virgin Galactic, run by Sir Richard Branson. Let's take a look. This has definitely been one of the most requested tickers for me to cover this weekend, and to say that its rise has been phenomenal is an understatement. It has been just as meteoric, or even more meteoric actually, in terms of percentage, on a percentage basis, than Tesla, and they both have been taking advantage of the extremely favorable conditions in this very bullish market, where dips are being bought left, right, and center. Shorts have been roasted, have been burnt, have been barbecued, and it seems like they may have somewhat pain in order, given we're now on the 4 hourly chart. But if we take the even longer term view, just so that we can have some wider context, and do recall that this is something that has a very limited price history, and so it goes without saying that we clearly have here a very nice and tight consolidation. And as we know from price theory, price moves from balance to imbalance, or from consolidation to price discovery. So after having had this many months, probably a year and a half of price consolidation, any move out of it, imbalance, would definitely cause a sharp move in one direction. So we have two things going on here actually, because we had what seems to have now been a fake out to the downside. Price broke convincingly beneath this balance here, with a low at around 960, all the way down to just about 690. However, from a failed move comes a fast move, and so we pop back up, bullish engulfing, taking out this, not only the candles prior to it, but taking out the high of the range that we were tightly wound in. So we have to consider that a monthly breakout, because we closed above the highs, not only of this very tight consolidation, but of the open of this candle as well. So in the short term time frame, but on the monthly basis, we have a monthly breakout, which is always something that you should be paying attention to. A breakout and a hold. That, coupled with some news headlines of them just beginning to put things operationally into motion. You have the Tesla fanfare, you have the bullish environment, you have the short interest piled into there, and you have what seems to be like genuine buying coming in, coupled with shorts getting squeezed. So you have both of those variables acting in the favor of the bulls at this time. However, look at the expansions of the range. So going from an average range of around 10 cents on a monthly basis to having ranges approximately of 4 and 350 to now 5, 870, and 12. If you take this all together, we've had more than 20 times range expansion. And so I would definitely at this point, definitely not be buying at this point, except on a very in a very tactical and limited way. Of course, there's a million and one ways to skin a cat and to make money in this market. So I'm not going to say that it is not a buy. It simply depends on your particular time frame. For my kind of trading, active trading and or investing, this is completely not a buy, because I have no asymmetric risk to reward here in my favor as a long, having price ranges expanded so briskly and furiously to the upside. This actually, the more it gets extended, is actually on from an asymmetric risk to reward basis, it is actually becoming a better short candidate. But let the stock tell you when it's when that time is approaching. How about for starters, if we go in on the smaller time frame, how about for starters, what I do like here in terms of possibly looking for, beginning to look for this to possibly put in a short-term top, is that the angle of ascent has increased, which means that things are getting euphoric, sentiment is getting even more stretched, and it is in that stretching of sentiment that the pain trade then becomes, okay, let's take it down and begin looking for sellers in this market on SPCE. So, keeping it simple, smarty, how do we trade this? Well, this thing closed almost on the very high of both its thus far monthly, weekly, and daily candle. And so I would probably expect on Tuesday that it would gap up, as statistically speaking, when a security finishes on the high of its daily range, and in this case weekly and monthly range, there usually is a gap to start the next week. However, that gap may indeed turn out to be a selling opportunity, as sellers see some opportunity to take advantage of the higher advertised prices to ring the register. How do we play this on the short side? Well, we'll definitely be looking for a 1 hour, at the very least, a 1 hour candle that does not make a new high, and then be looking very tactically on the shorter term time frame, the 1 hour, the 15 minute, the 5 minute, a failed retest of those highs, to then use the day's high as the line in the sand for you leaning short against it. On the upside, where would I be looking to buy SPCE? I would not be looking to buy SPCE before, at the very least, this 20 level, and then probably even more so back to this former trend line that it held in the vicinity of 1825, with a first add at 1950. That is my thoughts on SPCE. It has totally gone parabolic. The sentiment is completely euphoric around it, but sentiment can continue to be euphoric around it longer than you can be solvent. So there's no need for you to be a cowboy. There's no need for you to be a hero here to put yourself and your entire account or your account in jeopardy trying to step in front of this very powerful trend that we have at the moment. Let it come in. Let there be red 1 hour, red 4 hour. There will be lots of meat on the bone if you're looking to get this short. Whereas for a long, I would definitely be ringing the register. I mean, what more could you possibly ask for? Several 100% return if you got in anywhere after that monthly breakout at around 960. You're sitting pretty. You're sitting pretty. So be safe out there today, guys. Keep it simple, smarty.